So the markets are down this year around 18 to 28%, depending on the index you look at. All your favorite stocks and ETFs are down 5, 10 to 20% or more. The market is approaching bear market territory, which is defined as a period in which a stock or an index drops 20% or more from its highest point. Most people think if we have a market crash, they'll lose all their money. That's not the case here. In today's video, I'll be going over step by step how to make millions during a market crash or a recession. And to be honest, it's a lot more simple than you would expect. Before I get into the steps, let me explain why you'll be able to make money during a market crash. In essence, you make money when you buy low and sell high. For example, let's say you bought Tesla stock in November 2021 at around $1,200. As of this recording, Tesla is a little bit under $700, so you would be down over 50%. If you sold your stock, you'd be down 50% and have a 50% loss. But if you don't sell and hold, as the market recovers, you'll recover your gains and add more gains on top. You could also use this opportunity to buy Tesla stock for cheaper, which would make the average price you buy Tesla for lower. This is the easiest way to make money in the stock market. When the market falls, buy, hold, have patience, and make money. It's that simple. Now let's get into the steps that you need to make this happen. Step number 1, you're going to want to change your mindset. When stocks fall and the stock market falls, most investors panic and see this as a time that they should sell. Smart investors see this as a golden opportunity to build ultimate wealth. Long-term investors have different mindsets than other people. Their portfolio may be down, but great companies are on sale. You see, smart long-term investors know that the market will recover over time. So all these ETFs, stocks, and index funds that are really cheap on sale, they know that if they buy now, they will reap the benefits in the future. Long-term investing in the market almost always outperforms trying to time the market in the short term. The biggest factor here is emotional trading tends to lower your returns. For example, the S&P 500 posted positive returns for most 20-year periods. What can we learn from this? Investors who have the mindset of building wealth long-term and investors that ride out the wave of the markets rising and falling will reap the benefits in the future long-term. Step number 2 is to accumulate more shares. If you go to buy an iPhone and it's listed as 24% off, would you buy it? Let's be honest, most people would. This is a current situation for a company like Apple. Apple stock is currently down quite a bit. If you see this as an opportunity to buy Apple shares for cheaper, you will do very well in the long term. Now that was just an example, but it's a pretty simple concept. Look at it in the long term. All these stocks, ETFs, and index funds are lower, cheaper in price, and are on sale. If you're able to snag more shares of these companies, you will reap the benefits in the future as your gains will be much higher. The main lesson here is, the more shares you're able to accumulate during a dip or a sale, the higher your gains will be later on since you're the owner of more shares. Step number 3 is to hold, and do not sell. Did you know that the best investors are actually dead? A study was conducted to see which types of investors performed the best and had the best returns. They quickly found out that the accounts with the highest returns were classified as dead or inactive. In other words, dead people perform much better in the stock market compared to living people as they don't fiddle with their investment accounts to lower their potential returns. Now, what can we learn from this? The biggest thing working on any investor's side is time and patience. Trying to time the market or panic selling during market downturns will almost never beat long-term investing. Take emotions out of your investing, continue to buy on a consistent basis, and you will build wealth long term. Step number 4 is to rinse and repeat. The last and final step is actually pretty simple. It's to rinse and repeat over and over again the first 3 steps. Continue to average into the market, accumulate more shares at a cheaper cost, and you'll be set. Now, inevitably, some people are going to ask,
okay, then what if the market keeps falling and this isn't the bottom?
If you have a long enough time horizon, you really don't have to worry about it too much. An article and study from Charles Schwab states that there's a high cost for waiting to get into the best point of the market. The study in the article found that putting your money to work right away, along with dollar cost averaging, came out on top comparing to trying to time the market. The study also suggested that badly timed investments into the stock market perform better than no investments into the market at all. The study pretty much suggests that people who procrastinate are likely to miss out on a lot of stock market gains. Bank of America found that since the 1930s, if you sat out the best 10 days per decade, your returns would be a measly 28% compared to an 18,000% return. Wow. Another reason to continue to invest into the market is that the best days usually follow the worst days in the market. A study from JP Morgan found that 7 out of the 10 best days in the market occurred around 2 weeks after the 10 worst days in the market. One of the wisest rules in investing is when others are panic selling great companies and investments, buy. Unfortunately, most investors do the opposite as fear and emotion overtakes them in the short term. The investors who are able to ride out the wave and continually invest without putting emotion into it will build the most amount of wealth. It's a proven fact. I want to leave you guys with my favorite investing quote of all time from Warren Buffett. Be fearful when others are greedy, and be greedy when others are fearful. That's it for today's video, guys. Thank you so much for watching. If you're new here, my name is Paul, and I create content on personal finance, entrepreneurship, investing, and personal growth. If you learned anything from today's video and enjoyed it, please smash the like button and subscribe for more future videos, as it helps me out so much at no cost to you. Always remember that your life is a masterpiece. So let's unlock that full financial potential. Catch you guys in the next video. Peace.